So, good morning, everyone. After I registered to the WFC, I've reached out to Anna to let her know I will be attending. What I didn't know is that she would enroll me for 2 presentations. What she didn't know is this is my first WFC and my first time in Prague. So, Anna, I would have said yes to anything that you would have asked me just to be here today with you. So, ladies and gentlemen, this morning I have a target and I have a mission. My target is to make you speak. I really want questions. So I'm going to keep my presentation short and sweet so that we have sufficient time for those questions. My mission is to tell you how important the securities segment that contributes more than 50% to our traffic, and how important securities market infrastructures and their communities are to SWIFT as we are transforming to meet your evolving needs. Exactly 50 years ago, SWIFT got created by the financial industry as a network and a standardization body. SWIFT quickly became the first platform of its kind, not only carrying standardized messages, but also offering a wide range of mutualized services. Services such as compliance, KYC, reference data, business intelligence, and more recently, shifting towards transaction management services, such as central translation, we were talking about coexistence, orchestration, tracking in the payment space, and more recently, end-to-end tracking of securities settlement instructions. Oh, I went too fast. How can I go back? Thank you. Hopefully there is a magician doing it. Throughout the conference, we've heard about a word where settlement cycles will differ from one market to the other, where regulations differ across jurisdictions, where the industry is still struggling with different formats, whether to migrate or coexist. A world where interoperability is going to be more important than ever to bridge traditional and digital ecosystems and the many platforms that are emerging to serve them. That's the market reality we are facing. But we are also mindful that what securities firms want is different. And collaboration on key market initiatives such as T+1 and the ISO discussion we just had will get us closer to a target state where we are operating in a highly efficient, frictionless, and interconnected industry. Oh, again too fast. Do you mind? Thank you. SMI play a key role in this transformation. Looking at the SWIFT data, I will pick only 2 numbers here. A little more than 100 CSDs are using SWIFT today, partly enabling the CSD links that Olga's panel discussed yesterday. The second number is SMIs and their direct users contribute to more than 1/3 to our securities traffic. This is massive to us. In this context of market transformation, SMIs have specific challenges and priorities that we keep in mind at SWIFT when evolving our value proposition. For the sake of time, I will highlight 3 of them. We've heard it from the Minister of Finance on day 1. CSDs play a major role in attracting capital to their local markets, specifically when they manage to make it easy to access both for small players and global players. Fostering market efficiency goes hand in hand with capital and attracting capital, whether reducing settlement fails or reducing the time by when assets and liquidity are made available. And my last pick, but not the least, continuously invest into secure and resilient infrastructures, including to support new asset classes and digital custody needs. I won't go into more details. I know you know, and better than me. I presented this to the WFC board on Wednesday, and I'm really grateful for their feedback, that we are indeed looking at the right priorities and challenges here. So how can SWIFT help CSDs? The Smarter Securities stream, under our instant and frictionless strategy, is about 3 pillars: supporting the industry with post-trade efficiency and harmonization, to navigate the settlement discipline regimes, but also achieve greater automation in the corporate action space. By tackling some of the long-standing data issues that we've seen, and that James covered this morning. Preserve SWIFT's client's single window. This is extremely important to us, by enabling interoperability across assets and traditional and digital ecosystems. Yesterday, you've heard my colleague Nick Kerrigan tell you about how we are intensively experimenting in the digital space, looking at tokenized assets and CBDCs. The third pillar is about embedding more mutualized services on our platform, especially leveraging the data that is traveling on our network. For instance, to support ESG requirements by collecting corporate issuers' information, always under the very strict data protection framework that SWIFT is well known for. Concretely, what does it mean for SMIs? Well, we have products and services that are off the shelf that you can already use to accelerate on your priorities. Products and services such as cloud offering and light footprint, and I'm specifically thinking about small customers here, small users in local markets. Standardized API gateway and developer toolkits. Jean-Paul told us about the importance to remain aligned with the ISO 20022 data dictionary and data model. We do have the tools to help you develop those standardized APIs. And community pricing, just to highlight a few. And we are working on new services to respond to new challenges. Our value proposition for SMIs is threefold. Keep working on interconnectedness and reach, coming back to the power of the single window. Support the efficiency and risk reduction industry agenda. I will expand on SWIFT Securities View, the end-to-end tracking service for securities settlement instructions. And as a neutral party, as a party used to deal with market coordination, we want to foster collaboration around innovation. I will say a few words on the current DLT interoperability experimentation that we are running. But first, the foundational layer. SWIFT Securities View is a service that is built on the existing rails. This is extremely important. You can access it today without changing your footprint. A service that brings information today exchanged in a sequential manner, bring all that information together in a transactional view across the participant chain. Both counterparties can see the life cycle of each other's instructions linked by a unique end-to-end transaction identifier, the UTI. Such transactional view is provided in real time as messages hit the network and is distributed simultaneously across the chain in a GUI via message format or APIs. For CSDs, joining this service is a way to help market participants reduce or avoid settlement fails. It helps fast-track the resolution of those settlement fails when they happen. With their users joining the service, CSDs can reduce the number of customer inquiries they receive, and they can enrich their own data products, such as fails predictability dashboards, with an additional transaction data set. Speaking under the control of our host, Andre, I am very pleased to share the news that CSD Prague joined the service this week, alongside roughly 40 participants, only 4 months after go live. Thank you for that. And while we are onboarding users onto the foundation, we are already preparing for the future. Together with a coalition of the willing, we are exploring how Swift single window and existing rails, and how ISO standardized messages, the comment I made earlier, can help our clients connect and talk to multiple DLT providers, shielding them from the complexity of various protocols. In other words, how blockchain interoperability can be achieved through Swift mutualized infrastructure in a cost-efficient way, making the digital space more inclusive and collaborative, and as interconnected as in the traditional world today. More on this at Cybos. The experimentation is running, and we will be sharing the results with the entire industry. On this note, I would like to thank you for your attention this morning and open the floor for the many questions I'm sure you've been preparing for me.
Thank you very much, Charifa. We have a question here from Sam Riley from Clickstream.
Thank you very much, Charifa. One thing that obviously was touched on yesterday was about efficiency, and you did mention it a little bit in your slides, but given the amount of data that Swift has and the ability to be able to see where the inefficiencies are, what are Swift's thought about services that they can offer in the future around efficiency, data, etc.?
Thank you, Sam. This is a very interesting question in the sense that it is something that we've been very much using internally to follow the evolution of the industry in terms of settlement efficiency. We've been specifically looking at it recently in the case of India moving to T+1 and what lessons learned we could take from that in terms of settlement efficiency and the implications of moving to T+1. What we've been doing so far is sharing that macro information with industry associations, specifically the working groups that are working on T+1, for them to understand what's the current situation, and if we would consider the India being as a first use case to move, what are the lessons learned. But we are getting more and more questions or demands from our clients to package this into some sort of business intelligence service. So we are looking at it, and we are also looking at it as part of the Securities view, because Securities view gives you additional information, not only in terms of comparing the messages, how many instructions, how many confirmations, what are the different statuses, but also from a transactional perspective. So that's even much more richer information that we can provide. But that's definitely something that we can not only share with the industry, but also tailor-made for clients who are interested in that data.